Well, busy times, and they're getting busier. At present, we're told that we can move to level 3. What does that mean, and how are we going to act? Questions. But one big question, well, a couple actually, have come up about your financial options. And for that, of course, we need to talk to Brian Greer, CEO of Loan Market New Zealand. Brian, again, thank you for your time today. News released in relation to the LVR. So if people aren't so familiar with their TLAs, 3-letter abbreviations, what's the LVR and what does it mean?
Hi Grant, good to chat again. LVRs is loan to value ratio. So that's the amount of money you can borrow against the value of the property that you want to buy or own. And traditionally, banks prefer you to have 20% deposit or equity, and most first home buyers particularly don't have that. So back in the day, you were able to just, go along to the bank, and the bank could do those as they wanted to, up to 5% deposit, or lending you 95% of the value of the property. In 2013, the Reserve Bank brought in some LVR restrictions. So they said to the banks, you can't just do that as and when it suits you. You can only do it to a certain percentage. So you're only allowed, and they change it from time to time depending on the market. But as it sits currently, right now, today, banks are not allowed to do more than 20% of their loans for people that don't have at least 20% deposit for unoccupied. And if it's for investment, got to have 30%. But they have signaled that they're reviewing that they're going to remove those barriers completely. And they're in consultation with the banks now, and they're going to formally announce next week what will be effective from the 1st of May. Personally, I think we won't see much change from the banks in the immediate few months post this, but then they'll start to get more comfortable with how we are post-COVID, and then it will open up. And I think in the next 3, 6, 9 months, it will become a lot easier for people to get in with a smaller deposit.
The other thing that's come out this week is talk of deferred payments for mortgage holidays and things like that. How is that a golden solution for many? How do they work, and what's the pros and cons around taking a holiday?
Sure. It took about 3 or 4 weeks of bashing that term mortgage holiday out of everyone's vocabulary, because it's not a holiday, it is a deferment. Essentially what happens is, if you are under financial pressure, you can ask your bank through us or any mortgage advisor, or directly with the bank, to defer your mortgage payments. What that means is the principal portion you don't have to pay, but the interest keeps accumulating. So I'll give you a really quick, easy example to follow. $100,000 mortgage, and the monthly payment is $800. $600 of that is interest, $200 is principal. They'll stop the principal portion, and the $600 will accumulate, but you're not in default of your loan. But in 6 months' time, you'll owe $103,600. So it's a last resort. We've been talking to all our clients. What we suggest is, if you can, we can revert you from principal and interest to interest only. So you do pay your $600 a month. And for many, many people, that's been more than enough, because they're on 80% of their income. Their lifestyle living costs have come down, and they can cope well within their means on that. So talk to us first before deciding what's best for you. There's also a really cool calculator. We've got a link for you. You can jump in, put your numbers in, and it'll show you what it means for your situation.
Excellent. Well, again, solid advice as always. We'll get that link and tie it to this post as well. And you don't need to be an existing client of Loan Market. The contact and the question is free. Using your time and skills, good. Well, it sounds like it's going to be a better option than instantly thinking that deferring it till later. It's like the credit card mentality. It's the never, never. There is a never, and it happens, like you say, at the end of it all, there's now more money to pay. So, solid advice. All right, I'll get people to get in touch with your good self. We'll catch up next week. Level 3, here we come. I think it's going to feel the same, but different. We'll see how we go. Thanks for your time. Cheers, man.
Thanks. Cheers.